Hi everyone, welcome back to your weekly market update from G2 Financetech. Let's dive into the top global market moves from last week and break down what they could mean for the weeks ahead. United States. The US markets had a relatively muted week despite some big headlines. The Nasdaq held up best among major indices while the broader market saw modest losses. Why? A mix of tariff announcements and mixed signals from the Fed. President Trump rolled out new 25% tariffs on countries like South Korea, Japan, and Brazil. There was also a 50% tariff on copper, which immediately spiked US copper futures. Interestingly, markets barely flinched, a clear sign that investors may be getting used to trade related noise. Meanwhile, Delta Airlines gave a strong earnings outlook, pointing to resilient travel demand. That lifted the airline sector overall and helped temper some of the tariff concerns. From our side at G2, we think the market's resilience to trade shocks show that investors are placing more weight on earnings and consumer behavior than the political headlines. On the policy front, the Fed minutes showed a split. Some members want rate cuts as early as July, others don't see any cuts in 2025. That uncertainty will likely keep markets on edge as we head to quarter 3. Europe. Europe ended the week on a mixed note. The Stoxx Europe 600 was up 1.15%, with Germany and France leading the gains. But those gains faded slightly after Trump hinted at potential tariffs on Europe goods. On the economic front, UK GDP shrank for a second straight month. But the housing market seems to be stabilizing, and a new mortgage guarantee scheme might support first time buyers. Retail sales across the Eurozone fell, and industrial output in Germany and Italy showed signs of strain. At G2, we are seeing a divergence. Equity markets are reacting to political noise, but underlying economic data still feels soft. Europe's trajectory depends on a lot on trade negotiations in the coming weeks. Japan. Japan saw mild losses this week. The Nikkei dropped around 0.6% as tensions with the US on tariffs simmered. The good news? Household spending rebounded more than expected, but real wages declined sharply, a warning sign for broader economic strength. With upper house elections nearing, political uncertainty could keep markets cautious. Our view: Japan's recovery is fragile. It needs wage growth to sustain domestic demand. Until then, the Bank of Japan is likely to stay patient on further tightening. China. China's market edged up slightly. The big news? Deflation persists. Producer prices fell for the 33rd straight month, the biggest drop in nearly 2 years. Consumer prices rose 0.1%, but it's likely due to stimulus, not consumer strength. Beijing is expected to roll out more support measures soon. State media reports suggest a crackdown on low price competition and outdated industrial capacity is underway. Our take: the longer deflation lingers, the harder it will be to stabilize growth. Policy action is crucial and fast. Our take: this past week showed a market that's becoming more selective. Tariffs, mixed central bank signals, and slowing global demand are being weighed against still resilient consumer trends and some bright spots in corporate earnings. At G2, we believe the next phase for markets is all about balance, watching for shifts in policy, staying alert to geopolitical risks, and focusing on quality in both equity and debt markets. Thanks for watching. Drop a comment with what you are tracking this week, and don't forget to follow us more for smart insights from G2 Financetech.